day traders, swing traders, and scalpers. These are the three different types of traders in the market. So in this video, I'm going to explain these three different types of traders. I'm going to talk about what kind of stop losses they use, how much they risk per trade, the type of personality they have, and a little bit extra. So that by the end of this video, if you don't know already, hopefully you'll know what type of trader you are, and then you can go into the markets and do what you need to do. So let's get into it. The first type of trader that I'm going to discuss is a scalper. So scalpers, it sounds like a very intense word, like a doctor trying to get really precise, and that's why it's called a scalper. They generally are very precise with their entries because they have to be, because they have very small stop losses. They also trade off very short time frames, so we're talking about the 1 minute, the 5 minute, and the 15 minute. They usually execute a lot of trades in a day. In a month, they probably execute between 100 to 200 trades. And because they execute so many trades in a month, they're obviously going to risk a lot less, because you don't want a situation where, let's say you take 100 trades in a month. If you're risking 1% per trade, if you lose those 100 trades in a month, you've lost 100% of your account. So obviously these kinds of traders, they have to risk a lot less, because, you know, if they have a really bad month, they don't want a situation where they've lost all their capital in month one. Also, because they're taking a lot of trades, their transaction costs tend to be very high, because every time you execute a trade, you have some small little transaction cost. So obviously, the more transactions that you undertake, the more your costs are going to be. So I want us to think of a scalper a bit like a sprinter. So think of Usain Bolt. He starts his 100 meters, he sprints really fast, and he's done in about 10, 11 seconds. So that's a scalper. They're generally in the market for very short periods of time. So let's talk about what sort of personality would a scalper be. Someone who really would do well in scalping is someone who's not very patient. They like to know the end result of their trade very quickly. You know, if you enter a trade, you want to know in the next few minutes, was I right, was I wrong? So if you can't hold your trades for very long, the best thing for you is to try scalping, because you get to know whether you lost or won very quickly. Also, scalpers tend to be very precise, and they have to be very alert, because you know, when you're dealing with very short time frames like the 1 minute or the 5 minute, you have to make decisions very quickly. Because if you are not very quick and you're there sitting and daydreaming and all this and trying to figure out what's going on, by the time you've figured out what to do, the market's already gone, that trade is gone, and you didn't even take it.
Oh dear, what a pity.
Now, there's actually two types of scalpers. So there's the ones that sit on their screens all day long and they just trade the entire day. So they'll just sit there from maybe 8 o'clock in the morning until maybe 5 o'clock in the evening, and they'll just be trade. And they probably have pulled maybe 40 trades or something crazy like that. Then our second type of scalper, and I've seen this a lot, is there's these guys that will wake up at 9 o'clock, they'll come to their screen, they've got maybe an hour in which they trade. That hour is their best time. They might be a London session trader, and they come in for that quick London session, but not the whole of the London session, maybe just 1 hour of it, the most productive. They take their trades, they're done for the day, go back to sleep. So now let's talk about day traders, which is the second type of trader. So these traders are generally in the market for a lot longer than a few seconds to a few minutes. They're usually in the market for about a few hours. And day traders, as the word day suggests, they usually close out their positions at the end of the trading day. So what kind of time frames does this typical day trader use? So you tend to see a lot of day traders tend to look at the 15 minute, the 1 hour, and sometimes even the 4 hour as confluence. They also tend to have a lot bigger stop losses than a scalper, usually, and they tend to execute a bit less trades than a scalper. They probably take about between 30 to 40 trades a month, depending on that kind of strategy that they have in their day trading. So day traders, because they obviously take a lot less trades than a scalper, that means that they can risk a little bit more. So let's say your scalper could probably only risk 0.1% of their account per trade. Your day trader might be the guy who's risking 0.5 to 1% per trade. So I want us to think of a day trader as a bit like a 400-meter runner like someone like Wade Van Niekerk. I'm not sure if I said that correctly, but anyways, we said that a scalper is a bit like a sprinter, 100-meter sprinter, 11 seconds, okay? Now a 400-meter runner probably finishes their race in a few minutes. So just by that, you can see the difference. Day trader obviously hold their positions for a lot longer than a scalper, i.e. this Wade Van Niekerk guy, he's obviously running a lot longer than Usain Bolt. Usain Bolt's 11 seconds and maybe he's a few minutes. So just to give you that sort of idea in terms of time frames. So what sort of personality would you need to be a day trader? Day traders are a little bit more patient because obviously it takes a while for them to know whether they won or lost compared to a scalper. And they also probably spend a lot more time on the screens generally than a scalper, because remember, I used that example of the scalper who comes in for 1 hour in the market. Your day traders will probably be there the entire day. They'll have a whole session. So maybe they might be a London session trader. So they'll trade from the beginning of London to the end of London. And maybe they might even extend to the New York session. So your day traders and your scalpers generally are guys that have a lot of time to trade. So these are the type of strategies that you'd use typically if you're not working a 9-to-5 job. I do know some people who do work a 9-to-5 job and they are able to scalp or day trade because the session in which they trade is actually not the same session in which they work. So you might have someone who's working a London session, they're working their job in the London session, and there might be someone who trades the Asian session. So when they come home at night, then they'll trade. So you can be a day trader and a scalper and still have a 9-to-5 job. But generally, we tend to find that most people who are day traders and scalpers probably don't have a 9-to-5 job because they need that time to trade. And you might not actually be able to trade the Asian session because your strategy might not allow it, and your strategy might work the best in London session, but that might be when you're working. So that might be a bit difficult for you to be a scalper or a day trader. Now let's move on to my favorite, which is number 3, which is the swing trader. So a swing trader generally is in the market for a few days, few weeks, or a few months. So what's really cool about this is someone who's a swing trader usually probably only takes a few trades a month. So typically probably takes between maybe 3 to 6 trades a month. Swing traders usually trade off higher time frames. So usually we're looking at the 1 hour, the 4 hour, the daily, the weekly, and sometimes even the monthly time frame. So they're looking at it in terms of a longer term perspective. And this is why they tend to take a bit less trades, because it takes a long time for their setups to occur. And they usually have really, really big stop losses, because if you go on the daily time frame and if you go and put a stop loss to your low point, it's probably like 100, 200 pips versus someone who's a scalper and their stop loss might be like 1 pip, where their low is like only 1 pip. And because swing traders take a lot less trades, typically, they can risk a lot more per trade. So your swing traders can risk like 3%, 5%, and even to the extreme, even 10% per trade, depending on their strategy. So I want us to think of a swing trader as a marathon runner. So someone like Eliud Kipchoge. Again, I don't know if I got that right, but still, okay? So this guy is a marathon runner, and I think he has the world record. If you think about it, he's running this marathon, and he's probably running it for a few hours, okay? I mean, if I was running that marathon, I think I would be there for a few years. That's why I'm not a marathon runner.
Run, boy!
So we said the scalper's Usain Bolt, he's a sprinter, right? 11 seconds. Then we said the day trader is Wade Van Niekerk, who's a 400-meter runner, so a few minutes in the trade or in the run. And then we've got this marathon runner, Eliud, who is going to be running for a few hours. I just used these 3 examples to give you an idea of how long they typically take to run / in our example, trade. So let's talk about the sort of personality of a swing trader. So your typical swing trader is obviously someone who's very patient. You enter a trade and you've got to wait a few days or maybe a few weeks until you find the outcome. Was I right? Was I wrong? So you got to be very patient. But another thing that's really cool about swing traders is you don't have to make a decision like right now and say, okay, I'm going to get in. You've got a lot longer to decide, am I getting in? You can look at the news. You're able to really think before you get into the trade. So if you like to really think before you get into something, then you most likely would do really well in swing trading, especially if you're very patient and disciplined. Obviously, you are going to spend very little time on the screen if you're a swing trader. Swing trading is a lot easier for people who have a 9-to-5 job or children or other commitments, because you don't have to sit there in front of the screen and trade the whole day. You can look at the market, cool, you can put an alert, nothing happens, you can go do your job, go see your kids, whatever, and then only when that alert comes, then you're cool. Let me get on my computer, look at the market, cool. All right, let's see, right, okay, let's buy, boom, buy. And then you just continue with your life and then put your stop loss, your take profit, and then maybe in a few days, then you'll discover whether you're right or wrong. So you've got to be really patient, and I would recommend swing trading to most people who have a 9-to-5 job, because you'll get to live your life but still trade. The only downside is the patience, because a lot of people are not patient and they like to know the outcome straight away. So if you can't handle that, then swing trading is not for you. So as you can see, all these different types of traders obviously rely for you to pick which one you want to be. It all depends on your personality type and your lifestyle. Now that you've learned about all these different types of traders, let me know in the comments which type of trader you are.